Mr. Dinesh Agarwal, founder and CEO of IndiaMart, here to break down the numbers with us. Mr. Agarwal, hello and welcome. First of all, sir, paid suppliers additions have remained weak despite the multiple initiatives that the company has taken. What concrete actions are being taken to improve gross additions and in turn reduce silver tier churn? By what time do you expect visible improvement in this?
See, we have been taking multiple initiatives. We have improved the quality of buy leads and inquiries. We have put up better buyer verification. And despite that, the silver churn remains elevated. And we do not intend to press paddle on the more acquisition until the churn is fixed. So that is what is taking time, and we continue to work towards it. I cannot guide you when can we start seeing uptick on that.
Right. Talking about gold and platinum subscribers, that's definitely continue to performing well. But do you expect premium subscribers to contribute a larger share of revenue going forward?
See, currently it has been inching up slowly and slowly from 60-65% to now 70-75%, upwards of 75%. Since the customer mix is more or less stagnant, that is why we are not seeing more uptick, but otherwise it will continue to remain in the same range.
Right, Mr. Agarwal. ARPU as well has supported revenue growth, and this is despite a largely stagnant paid supplier base. Can you tell us how much further pricing-led growth is achievable?
We have been historically having anywhere between 5 to 10% ARPU growth. And that ARPU growth is a mixture of price increase as well as the upsell that comes from the silver to gold. Since the silver customers are remaining stagnant, and that is why you are continuing to see ARPU-led growth. Once the customer bases start to increase, you will see both coming from ARPU as well as the customer addition.
With AI-powered search and LLMs changing user behavior, how is IndiaMart adapting its platform to remain relevant and protect inquiry volumes?
See, AI-powered search is emerging, and slowly and slowly Google itself is adopting AI-powered search on the google.com main search. So over the time, whether people will move 100% to the AI or it will become a hybrid search platform just like Google AI overview, that needs to be seen, and we continue to monitor. See, at the end of the day, if our content is valuable, if our matchmaking is valuable, whether it is AI or whether it is search engine, they will continue to drive traffic to us.
Understood. Also tell us, should the current EBITDA levels be considered sustainable despite the ongoing investments in AI and new initiatives?
See, we have been guiding that the current, on the standalone side, the EBITDA margin should be taken on a yearly basis, because quarter on quarter could be fluctuations. Fourth quarter is lower and first quarter is higher. On an overall basis, we have been guiding that it could be 33% plus minus 1 or 2% here and there.
Looking ahead, where do you see the largest growth opportunity over the next 2 to 3 years? AI-led offerings, fintech, business-enabled SaaS, or a recovery in the core marketplace business?
See, core marketplace remains the mothership, and that generates the 90% of the revenue, as well as the most of the profit is coming. So I think these are not either or. The core marketplace will continue to have the network effect and community effect, and we will continue to, because that is the horizontal platform that brings the traffic, and millions of buyers and sellers are benefiting through that. While the other initiatives like SaaS enablement as well as AI-led initiatives, they are slowly becoming significant. So, for example, Busy is now becoming a little significant, but those will take time to become a significant portion of our business.
All right, and thank you, Mr. Agarwal, for taking the time to speak with us.